Gautam Chhaochharia, Head of India Research at UBS Securities. Many thanks for joining us. Gautam, this is Manvi here in the Delhi studio, and let's get straight to it. I mean, the gains that you see on the benchmark indices right now, what are they indicative of? What are they reflecting? In simple words, what is the market cheering?
So it's reflective of also relief as well as reassurance. Relief for local investors in the form of no capital gains tax, which was being talked about. Reassuring from a global investor's perspective of sticking to the fiscal roadmap despite the challenges and despite demands for support to the economy. So sticking to 3.2% this year and 3% next year is a big reassuring factor for global investors, because one of the planks of them investing in India has been, beyond the growth story, the macro stability which India has offered. And this fiscal consolidation roadmap goes a long way towards reassuring them on that. These are the two elements, and obviously at a small marginal level, the withdrawal of the indirect transfer provisions for foreign investors has also helped sentiment. And beyond that, all the policy focus on rural, poor, infrastructure has also been on the areas or lines which the parts of the market are expecting, without really going into something which market men would call populism. So we haven't seen extreme populism, at the same time trying to focus on the right areas of the political economy and maintaining the broad policy path.
Okay, you know, I noticed an interesting distinction in commentary this time around between popular and populist. And, you know, that's been something that's been coming through in recent conversations I've had as far as the budget expectations were concerned. Gautam, let me ask you this then. Given what we've seen, and I'm sure it's going to still take some time to go through all of the fine print, but the focus on infrastructure, on rural, on digital, and yet commitment to fiscal deficit maintenance, where do you see now themes to play this market here on? Is housing a natural one?
So yes, obviously beyond the macro story, there are always micro elements which come out of the budget in terms of where they are focusing on. So it seems like housing, infrastructure, rural India. But again, we have to go through the fine print, because I wouldn't just like to get carried away by the headline numbers as talked about in the speech, because if you look at the allocation last year, the actual spent, and in that context, the numbers being talked about this year, because sometimes the percentage Y&Y numbers can also be a bit misleading. So I won't just draw my conclusions specifically, but yeah, these three areas seem to be obvious elements of the policy stance and should be positive for sectors and stocks aligned to that.
You know, how does one take this budget forward in terms of playing the consumer discretionary theme? I mean, you know, we just heard the chief economic advisor telling Prannoy Roy that, look, if there's one thing that's come through clearly in the budget is more money in the hands of the middle class. But how do you see that theme playing out as far as equities are concerned? Is it a tough one to call still?
So again, sector level, one of the calls we had made 2-3 months back was overweighting staples, because after 3 years of weak demand and volume growth, we have been seeing signs, including in the demonetization process, of a policy objective to support the lower end of the population and even the middle class. And this budget takes that stance forward. So we have moved consumer staples to overweight, which also reflects the current unattractive risk reward for the broader market at current valuations. So that's one sector, and the stocks within that which should benefit from this. Now, whether the higher disposable income for people who are in 2.5 lakhs to 5 lakh bracket leads to broader discretionary push, etc., that's something to be seen over time, because other factors also come into play, like the broader job growth trend, the recovery from demonetization, etc. But staples definitely is an obvious, clear beneficiary.
Gautam, I'm just going to pick up a couple of things which seem to be of interest to the market, and I'm referring just to the gains on the bank Nifty here and saying, okay, so, you know, what is supportive of those gains that the budget has delivered? You know, there is a commitment to recapitalization, there's a focus on affordable housing, and that obviously means more business for banks in a sense. But just flesh and expand, you know, the banking space vis-a-vis this budget.
So the banking space, again, nothing dramatic per se from the budget itself, apart from the PSU Bank recap numbers and the commitment to fiscal discipline, which is supportive of lower tax rates per se, which at the macro level is supporting the broader banking system. Now, a lot of the things which is required in the banking system goes beyond the budget in terms of asset recovery, etc. But the broader macro framework coming out from the budget is definitely supportive of the banking system, specifically the non-bank financials and the smaller banks.
Oil marketing companies, the suggestion that they could come together, the divestment secretary, I believe, just clarifying a short while ago that, or suggesting that there's room for merger, consolidation, upstream, downstream. I mean, it's an idea out there. How would you react?
It's a bit speculative at this stage and premature for me to comment. But anything which consolidates businesses and gives them better positioning in terms of pricing is always good. But it also keep in mind whether these companies end up being asked for increased social service.
Okay, I'm going to take a step back from the nitty-gritty and just ask you again, big picture. This budget is now behind us. We'll still take some time to get through the details. The question I'm asking is, do you see potential outperformance by Indian equities going forward? Or will some of the global drag points like trade and visa policies in the United States be a larger pressure on Indian equities?
I think three factors will be critical for market trajectory. One is, the biggest one would be what happens globally, because we've seen some initial concerns taking shape, but no specific measures either on India-specific issues in IT and pharma yet, though there has been talk about that, or even specific measures around global trade in terms of tariff barriers, etc. So that is definitely something to watch out for and will have a big impact on Indian markets. Second factor would be, while we normally don't say state elections matter, but UP elections at the margin will matter for the markets, because a lot of the big question in investors' mind is whether Mr. Modi's popularity is intact or not. And UP election could be looked at as one of the indicators of that beyond the various polls. And lastly, the technical factor, which is the retail flows. The retail flows have been one of the big factors supporting the market for the last few months. It's always difficult to model or predict flows, and to us, retail flows being good in India is also not just structural, but also a chicken and egg thing. The retail flows are strong because historical returns are strong, but that will be a big factor for markets.